The silver and cryptocurrency sectors are about to have their own Super Bowl of their own. But many people aren't going to be a part of it because they won't understand it, because they're going to grow angry, disgusted, pissed off, quite frankly, and they're not going to participate in the greatest financial game being played. And I'm trying to figure out how to show you and teach you and guide you through this process so that you come out of this cycle, this part of the cycle we're in silver and in crypto, changed forever, and to where you're constantly winning. In the last couple of weeks, I've gotten barraged with ideas and thoughts of how I can teach people better. But because you're here with me, I want to explain a couple of things, and I'm going to take a story out of being a firefighter. And then I'm going to get into the silver market, the crypto market, and how you're being dumped on right now by institutions. And I want you to think differently. I want you to start thinking differently. I learned this a long time ago, and even myself, I have a hard time sharing this and teaching people. When I was a firefighter, I went to school after I was a captain at one engine at one department. I came back as a firefighter in another department. I started working my way up, and I started really getting into instructing. I took all the fire instructor courses I could, worked on my state master instructor cert. And one thing I learned, there was a transition in my career. I learned that instructors simply instruct others how to follow guidelines. In the department, we would call them SOPs, or standard operating procedures. But it was boring. And most fire courses, you're taught the test. They literally have this joke in the fire service where they cough and sneeze or make this weird sound, where they're about to say this line, which is the answer to a test. And as bad as I was growing up in school, and it came down to just being lazy. All right, I'm just going to be honest with you. I was a lazy student, so I was not a good student. I didn't want to learn how to learn. In the fire service as an adult, I loved this. And so most of the people passed. Well, I started to get irritated with that system, actually, because learning in the fire service wasn't fun. People were just taking these courses to get higher ranks, and it didn't mean they meant anything. I worked for chiefs that I was a firefighter for much longer. They knew nothing about being a firefighter. So what I did is I transitioned from an instructor to a teacher. And what I did is I started creating my own lesson plans, to the point where I actually created lesson plans, would go to the local college, and I would get them approved by that college. So actually the college got to make money. I didn't make any money off of it. They would start charging the fire departments because the fire departments liked these courses like off-road driving and fire engines, these live fire training evolutions. And what I did is, in the teaching, I brought so much realism to the course, and I got to use real fire. Real explosions, real smoke, real colored smoke. I got to do all these cool things, and I started my courses. I would teach them and build the actual live exercises like a Hollywood set, to the point where SWAT teams were coming from like San Mateo County, departments from the Bay Area. These large departments were coming to these courses, and they were saying they'd never experienced such a real experience. It would really get their hearts pumping, really get them thinking. You know, they would go into structures that there's fire and smoke, and they would hear a baby crying, because I would set up recordings. I would have guys outside with microphones making specific sounds. It would put the pressure on. And that was the difference between being a instructor and a teacher. You see, a teacher lets their students go through stressful times sometimes to pull the best out of them. Well, in the game of finance, I don't want you to have stressful times. And what is happening right now, you have watched me warn a couple of times, when asset classes go up. Earlier in this year, it was crypto. It was exciting to make money. But the one thing is, the hardest thing for me as a teacher to teach you is when to take profit. And the truth is, institutions own retail investors. Institutions have already bought up the asset class prior to the run. They make money on the first 2/3 of the run up, and they sell it to the retail investor at the last 1/3 of a spike, and then it dumps because retail investors, by and large, only have so much money. But institutions are using your pension funds. Maybe you don't have a pension, but they're using pension funds from other people. They're using private equity and tons of investment dollars, and they can manipulate things down. The key difference here is that they exited while stuff is going up. They bought at the knees, they sold at the shoulders. Retail is always constantly trying to buy at the foot at the lowest price possible, which is darn near impossible because they have to fight their emotions. And they're trying to always sell at the very tip top of the bro hawk. I mean, seriously, it's tall hair. It's goofy hair. I get it. That's why I have it. So I started this last week creating a new course on the crypto cycles. And the first 2 modules are just about emotions and the difference between retail investors and institutions. And quite frankly, I'm giggling and laughing through half of it. And I've got to build a really good introduction and explain, because I'm not laughing at the student. I'm laughing at all of the years of experience I had after I learned this, after I'm like, I get it now. I can't sell at the top. I'm never going to be able to catch it. I just need to catch these clips of profit. And a couple days ago, I did an example on the channel, and I'm going to throw out a shout out to the newsletter. It's free to sign up. If you really do want to learn this, I'm going to start doing real examples. On one day, I'm going to come onto the channel and go, hey guys, I bought this at this price. Let's see if I'm stupid or if I'm smart, right? Because that's going to show the truth. And then I'm going to sell it at a gain or a loss on the channel, and trying to show you how not to be afraid to take specific, very calculated risks. But you can't do that unless you're on the newsletter, because the truth is the algorithm won't show you every video. And most people that are searching for the economic ninja, they're either going to find a fake channel, which there is a ton of them, or they're going to not understand that some of the videos are live, some are actual video feeds, and it just doesn't, their uploads, they don't show up all there. It's just how YouTube works. So I'm laughing during some of these things because I'm hearing all of the bad comments that come in from people that are afraid. And I'm going to tell you about this crypto cycle and the silver cycle, because right now, I did a video the other day, very few people saw it. Well, you guys know what the war started with. I said that there's propaganda coming out of China, and they're trying to get you to buy up all the silver, and there's no physical shortage of silver in America. And they're running the futures prices up. Well, they retaliated. Copy. That's great. I just did a video showing that a Chinese firm was the big winner, smashing down the price, because all they've got to do is short at the top and stop buying the futures at the top. They were running futures like crazy. And now this big slam down is happening in silver. And from the beginning, my stance was, this is not a normal run. This is not a panic run. This is not like a physical shortage. And I'm blessed with being able to know some of the industry leaders around the world. And I can't share what I have phone calls about, because they want to sell metal. I don't blame them, but they're actually selling less ounces right now than they were during COVID. And if you think for a second that I'm wrong, hit them up, have them show books, because there's less ounces. Now, on a dollar basis, they're all selling more because the price of the metal is exponentially more. But on an ounce basis, there's no physical run happening, okay? And if you are one of the rare people that have a physical store that's empty, that might be because the owner didn't run out and buy a ton at higher prices, and they're not managing their supply properly. Because every single store I've seen that I physically went into, they've got tons of it. And they're right now currently a bag holder if they were buying back metals at much higher prices. But this is also happening in the cryptocurrency market. You see, the blow off top of the standard altcoin run did not happen as planned. I was watching very intelligent people like Tom Lee speak about what they expected to happen at the end of the year. And I completely agreed with them. If you look back into the history of altcoins, that blow off top did not happen like it did in the past. One of the reasons was because of a takedown, again, by China in the crypto markets, and it actually led to a stock market takedown in October, on the 10th of October, okay? That has sent ripples, shockwaves really through many funds because a lot of them were holding debt on or positions on a margin account, and they got wiped out, okay? We're seeing a trend here. The East right now, the BRICS nations are actively trying to take down the US dollar. And what they're doing is they're trying to crash certain markets and boom other markets. But in the end, what's going to happen is the ones that they boomed, they're going to smash down on top of you. And that's why you have to be careful. And that's why this is the Super Bowl of the silver and the crypto trade. And I'm going to explain why. When you start to think like an institution, you completely pull emotion out. And what you do watch is emotion. You see on CoinMarketCap, there's a fear and greed index. And right now it's like a 5 to a 9. It is so low, it's crazy. I wouldn't be surprised if it goes negative. That's when they buy. But they don't take all of their money and put it in at once. They put it in, they layer in tranches. When I said in December, probably 30 times on 30 different videos from December and January, I said, I'm going to take my losses on my current trading positions. That's not my year-long positions. Every time things would go up, I would tell people on the channel, I would say, start taking profits. I'm pulling profits. And tomorrow I'm going to do the XRP video showing just 3 videos when there's actually about 50 of them where I said, I pulled profits. I'm pulling profits, actively sharing. But people are afraid to pull profits. The question is, are you afraid to pull profits? I talked to a young man, a really nice young man in the gym the other day, and he said he'd watched the recent XRP video where I made a sale, and he said, I'm afraid to sell. And I said, there's only 2 reasons you're afraid to sell. You're afraid of the tax consequence, and the only reason you're afraid of it is because you don't understand it. I didn't say those exact words, but that's the one reason. The second reason is why you're afraid is because you're afraid of missing out on future profits. And so we need to figure out, and me as a teacher, I need to figure out a way of breaking that. So this new course that I'm about to put out in probably a couple weeks is on crypto cycles specifically, the difference between retail and institutions and how these institutions play off the emotions, and they're constantly following. You know, one of the reasons why I say, hey, type this or type that is because I have a specific understanding because I see it every day because I create content, and other content creators, especially in the financial space, see this as well. They understand that there's a technology out there, not just to fake my name and put hundreds of bot comments down there to try and steal money from you and get you onto what you would think is my WhatsApp channel. I don't have that. I don't invest people's money, but they steal money every day. There's also that technology is also used to create really lifelike, what's it called? Comments, and then they thumbs up them. You've probably seen this. Do me a favor. If you've seen this, type yes. Where somebody goes, oh man, I just lost all my money. I can't believe it. You know, I wish I would have invested differently. And some of them are actually, they'll use my name in the comment. And then you'll see like 50 thumbs ups, and then you'll see like 14 responses. You go into the response under that, and you'll see tons of people that are saying, well, hey, you know, you got to invest a little at a time. You got to take your wins when your wins. And then it's like, well, how do I do that? Well, I started listening to Miss Cleopatra or Miss Germanica Saintenist or Jerome Bigelow. I'm just making up names, but these are the craziest names ever, right? They're all fake. This is created for you to go, oh man, that looks like a real person that had a real struggle, and I'm having that same struggle. I'm going to go to this person, and there's a Telegram group or WhatsApp, and you end up eventually getting ripped off. Well, on top of that, their technology is being used by certain funds to try and sway you. You see, on that last 2/3, like I said, institutions buy when everybody hates it. This is the Super Bowl. This is when you know you're winning. How many of you bought silver when everyone thought it was complete waste of your time? It's going nowhere. I heard that all the time. And to be honest with you, after learning this lesson of institutions versus retail, I loved it. Because the reason why most retail investors lose in the stock market, lose in crypto, and I mean, the percentages are like 70 to 90% of people that invest in crypto and stocks lose. Why? Because they're controlled by their emotions. Well, institutions, specific ones, are now feeding on that. And they'll go into specific crypto or stock channels or precious metals channels that know what they're doing, know what they're talking about, and they'll start a campaign to try and discredit them. I'm not joking you. This is a real thing. See, right now there's a war for your attention and where it's going. And what they want to do is they want to sell to you their bag, which is massive, and they need massive liquidity for this. They want to sell to you right as it's still going up, this euphoria, and they build this euphoria through comments, through posts, and now with AI, it is getting very scary and very real. I was talking with some people at the FBI the other day, and super high up, we're talking high up, and some of them, they were shocked at how fast these AI channels are proliferating and how real and the tonality, and it's like a hypnotist. Very calm, very soothing. I understand what you're going through, but it's okay. I have a solution for you. You see, the truth is that's how certain people in the last 25 years got elected. Now think about this. I like that person. They're just calm. They're just calling for change. We're going to change. We're going to make this amazing. And in all reality, I'm going to destroy this nation. Does that sound familiar? See, people want what feels comfortable to them, but making money isn't comfortable, because when you are comfortable, you are exposed. When you sell something that you bought low, they always say buy low, sell high. Well, high is at any point higher than what you bought. You've got to figure out when to exit. And to sit there and say, I'm going to exit everything, is not the best thing. You have to build your own parameters. And so you're going to see, in my opinion, a very, very weak, teetering stock market start to slow down and decline in value. When that happens, these big institutions are going to start selling off. They've already sold off a majority of their stocks. What they're going to start doing is they are going to start pulling out the positive narrative. It'll just be a vacuum. All of a sudden, you won't hear these positive narratives. And in crypto and silver and gold and oil will all pull down in price. You will see deflationary stories come out. You will see more negativity and doom and gloom coming out, which will accelerate a sell-off. And then what happens is, and it's very easy now for these institutions to run AI programs to get the sentiment. As a matter of fact, I'm sure you've seen where you can now just get the AI summary of everybody's comments, right, on a video, on YouTube, or the AI summary of what's going on this thread in Reddit or on X. And it's really easy to change the sentiment now because you can put a bot army down below in those things and just wreck the comments. And then most people, because they're headline readers, type 1 if you agree with that. Most people are headline readers. They just skim over headline and they think they know it all. They don't dig deep. They don't use analytical thinking or critical thinking skills to really measure what's going on in that story, right? So what they're doing is you're able to pull that, and the institutions can pull that prior to sending out a bot army. And as a matter of fact, there's already AI programs that can actually pull out which comments were created by AI. But if you don't know this as a retail investor, you don't understand the manipulation and the mind games that are being played right now in the markets. And that's what I want to teach you. I think this is the most exciting time to be alive. That's why I've got the newsletter. That's all it's for. I put together once a week or twice a week all the videos and go, here, these are all the videos I made. These are from my channel. This is what I made. So you can watch and go, hey, is the guy actually winning or is he losing? He bought XRP this date. He said why he bought it to prove a point. He sold it the next day. Most people don't do that. And that's not bragging. That's just proof. As a teacher, I need to show you that I'm doing what I say I'm doing, and I've got to put my reputation on the line. You know, a lawyer told me the other day, because one of my catchphrases, think about this. This is how I screwed up. He said, you know, when you've said so many times that you wouldn't be surprised if during a blow off top in the altcoin market, XRP went from 12 to 18, or went up to like between 12 and $18, right? And he said, when you said the term, I wouldn't be surprised, I knew, the lawyer, that you were being honest. Like there's no, like, that's not a prediction. You're just saying, I wouldn't be surprised, because I was trying to speak against all these $100, $500, $1,000 XRP predictions, which kept people just like, oh, buying more, as Ripple's just dumping it on the open market, 1 billion tokens a month. He said, the problem is that's not how the public perceives it. They perceived that as a prediction. And he said, but me as an attorney, knowing lawyers speak and how all this works and how important the words are, I know what you meant, but most people didn't. And so you see, I'm learning every day. There's every time I learn something new, I'm like, see, I'm not that bright, right? I only know what I know until I learn something new. So I can't stop learning. That's a great example. And that is the exact phrase I use, because I meant it. During a blow off top, things just get completely crazy, but not $100 XRP, not $1,000 XRP crazy, right? In this cycles course, I'm going to be teaching, there's one example I'm going to use. I'll use Theta as an example. You know, Theta's and looking, there's so many cool things to learn about these cycles, like when a company starts and when it's ramping up, and there's very little liquidity because of the amount of exchanges and because of the very small amount of tokens out, and you could watch them come out. And there's a constant battle between crypto companies releasing their tokens, especially the good companies. I was on the phone yesterday or 2 days ago with a rock star team of a company that I don't want to tell anyone about, because I've talked about it like 50 times, but I'm like slowly trying to keep acquiring stuff, because these guys are working their butts off, and girls, and and it's this constant battle of bringing token value, but also slowly bringing the token out with obviously the transparency, but being able to show value. You see, the stock market, the reason why stocks tend to go up better over time is because they're businesses that slowly grow. They grow their sales, they grow their earnings. It's a constant battle when they tell the public about their earnings, that they're keeping their margins as big as possible, but also trying to grow at the same time. Crypto companies don't have that. That is why their swings are so much more violent to the upside and to the downside. And when you control that emotion, you pull the retail investor out of you. Do me a favor, type yes or no if you think that's possible. Can you, I'm talking to you right now, can you pull the retail emotional investor out of you and turn into an institutional mind? Can you? Yes or no? It's a really simple question. Now, I know it'll take time. I know it'll take trial and error. I know it'll take work, right, to conquer the emotions. I still deal with emotions on a certain level when it comes to trading, okay? I'm telling you. But you've got to realize that that's what's going to make you successful. The Super Bowl for silver and crypto is when you're buying at specific points when no one else is buying, where they're saying you are crazy, you're stupid, you're whatever name, you do you kind of comments. That's when you know you're crushing, because at a specific point, you're buying during the most pain, the most frustration and anger for everyone else. And then you're going to sell it to them when it goes up in price and they finally figure out. I'd say I hope you got something out of this, but I know you did. I know this is making sense to you. I'm going to find new ways to teach you how to break certain habits, how to identify trends, how to identify where you are in this current cycle of silver and crypto so that you can take the win and make the most amount of money. Remember, paying tax, you always want to have a tax plan and pay the least amount of tax legally, okay? But I'm telling you, even if you're in the 36% tax bracket, actually, I can't say that because people in the 36% tax bracket, federal, they get this. So let's say you're in the 20 or the 22 or whatever tax bracket. For every dollar in profit you make, yeah, you got to give up 20 cents or 22 cents, but you get the other 80 or 78 cents to reinvest now. And your investment seed capital is growing and growing and growing. And that is how you become wealthy. Taking small wins, buying at the kneecaps, selling at the shoulders. Thank you so much for watching. The Economic Ninja is out.